Bitcoin prices are down again this month, and this time it's lower than it has been in a while. Being the most widely traded cryptocurrency globally, the rise and fall of Bitcoin has tremendous effects on other cryptocurrencies. As a result, crypto enthusiasts all over the world cannot help but wonder what caused the drop in the value of Bitcoin. And that is why in today's video we'll be telling you all the reasons why Bitcoin is getting weak so you can decide if buying the dip is a good idea or not. But before we get into all the crypto talk, please hit that subscribe button and tap the little bell icon to turn on post notifications so you don't miss any of our latest updates. All done? Let's get into it. The price of Bitcoin dropped below the $30,000 mark on the 29th of July, its lowest for over a month. In truth, the price of Bitcoin has been on a steady decline since its all-time high of $65,000 in mid-April of 2021. Since then, the world's most valuable cryptocurrency has dropped over 50% in value. As expected, the decline is a result of a number of factors that play into the volatility of the crypto market. Being a decentralized system, the crypto market is highly volatile and is easily disrupted. In simpler terms, crypto trading is not for the faint-hearted. Prices can plummet or rise following seemingly insignificant things like a tweet from prominent figures such as Elon Musk. Now that we have established just how volatile the crypto universe is, let us really get into it. Here's a list of the factors that are contributing to the steady drop in Bitcoin. The China clampdown. One of the major reasons for the drop in Bitcoin value is due to the recent announcements made by Chinese authorities. The country's production of Bitcoin accounts makes up over 60% of the global production according to data from Cambridge University. This is why, as soon as the Chinese cabinet promised to impose tighter restrictions and regulations on Bitcoin mining as a means of curbing increased financial risks in the country, crypto traders worldwide braced themselves for impact. Authorities in China's Sichuan province, which is the second largest producer of Bitcoin in the country, have ordered that all Bitcoin mining be halted indefinitely. The country's central bank has also urged banks and payment institutions to scrutinize Bitcoin trading and make necessary reports on irregular transactions. The Agricultural Bank of China also announced it would be conducting transactional background checks on its clients and Bitcoin miners to fish out any illegal or fraudulent activities in its systems. Bear in mind that companies involved in Bitcoin mining usually hold large sums of the coin, and fluctuations in their activities and transactions can have a heavy impact on the global value of the coin. However, to understand how these mining companies affect Bitcoin's price, we need to understand what Bitcoin mining is and how it is done. What is Bitcoin mining? Bitcoin mining is a process whereby Bitcoin is generated as a reward to miners for solving complex cryptographic equations using computers. The process involves validating data blocks and adding confirmed transaction records to a public ledger, also known as the blockchain, thus increasing its value. This is what builds up the crypto market, which is an alternative to traditional centralized banking systems. Just in case you're still confused, let's take a crash course on centralized and decentralized systems, shall we? In traditional banking systems, there is a central authority that controls, regulates, and updates the banking records or ledger. Only banks are authorized to connect to this centralized system to perform such transactions, hence its centralized nature. On the other hand, with cryptocurrency, there is no such centralized system. It operates using a distributed ledger system called a blockchain, in which anyone can connect and make verified transactions. These transactions are carried out using cryptographic algorithms. Being a distributed system, the transactions are not stored in any centralized system, but on every individual computer that connects with the blockchain. So in essence, Bitcoin miners perform these complex cryptographic equations and get rewarded with newly generated Bitcoin, which adds to the overall market value and distribution of Bitcoin. Hence, the clampdown by authorities on these mining activities, especially in a country like China, where Bitcoin production is at its highest, will impact the value of the coin and cause prices to drop. In response to China's Bitcoin clampdown, South Korea also pledged to impose stricter scrutiny on Bitcoin transactions as money laundering in the country through Bitcoin is at an all-time high. Bitcoin seizures. The UK Metropolitan Police on July 10th announced the seizure of millions of euros worth of cryptocurrency linked to international money laundering in London. The seizure is the largest ever to be recorded in the UK, with cryptocurrency worth over £180 million confiscated. This beats the previous record of £114 million of cryptocurrency seized in the previous month, which was also linked to money laundering activities. The Metropolitan Police are yet to release the identity of the perpetrators as the investigation is still ongoing. The seizure of such a huge amount of cryptocurrency in an already extremely volatile market is bound to leave a dent in the total market cap of Bitcoin and hence serve to crash its price even further. The Binance ban. The UK's fight against cryptocurrency-related money laundering activities has banned Binance from operating within the country. Binance is the world's largest crypto exchange in terms of trading volumes and having a daily exchange volume of over $8 billion, not including the United States. This by far is the highest trading volume ever recorded by any trading platform, owing to the fact that it is user-friendly, accommodating for new traders, and has some of the lowest trading rates by far. Binance Market Limited, which is the UK subsidiary of the Binance Group, was banned from undergoing any regulated activity in the UK by the Financial Conduct Authorities. And while this restriction does not mean traders in the UK won't be able to buy and sell on the platform, it means the platform isn't sanctioned by the FCA to provide such services. A trading platform or institution needs to be authorized by the UK's FCA to provide its services in order for its clients to be eligible for a financial services compensation scheme if wrongful losses were to occur. Although many other countries have already imposed these restrictions and users still continue to trade using the platform, UK restrictions have led to a sharp drop in user confidence, resulting in panic selling of Bitcoin and other crypto assets. Ban on Binance stock tokens. If you thought things couldn't get worse for Binance, you're wrong. The platform also saw restrictions from China regarding its stock token options. Hong Kong Securities and Futures Commissions, the SFC, became the latest agency to issue a warning against Binance, stating that it is aware that Binance has offered trading services in stock tokens in a number of jurisdictions and is concerned that these services may also be offered to Hong Kong investors. The SFC also emphasized that no entity in the Binance Group is licensed or registered to conduct regulated activity in Hong Kong. The commission insisted that stock tokens represent securities that include equity and debts and as such are subject to regulations from the commission. It insisted that stock tokens provided through Bitcoin and other cryptocurrencies constitute regulatory activities and as such require a license. This restriction on the trading platform has affected the transactions of Bitcoin and attributed to the dip in the marketplace. The stock exchange market. The stock exchange market is a different financial system as opposed to the crypto market, but both are not completely unrelated. Highs and lows in the stock market can cause fluctuations in the volatile crypto market and set it either soaring high or crashing down. This was the case earlier this month as the US stock market took a hard dive in stock prices. The energy, financial, and industrial sectors all recorded percentage losses as concerns of slow global economic growth were expressed by investors. The concerns came as the number of COVID-19 cases is on the rise, with the new Delta strain manifesting in unvaccinated persons. According to CDC data, the US is averaging nearly 26,000 new cases a day as of now, mid-July, which is alarming compared to the 7-day average of around 11,000 cases a day a month ago. The fear of another global economic crisis led to massive sell-offs by investors, with major stocks linked to global economic growth plummeting. Airline stocks got hit hard as investors expressed concern that more COVID-19 and flight restrictions would be put in place. Shares of Delta and American Airlines saw a 4% dip in stock prices, with Boeing losing as high as 5%. The energy sector took a major hit as well, with big names like ConocoPhillips losing more than 3%. ExxonMobil lost 3%. WTI crude shed 7.5% to settle at $66.42 a barrel. The energy select sector lost 4%. The financial select sector was the second worst performer, down 2.8%, as falling yields reduced the profitability outlook for banks. JP Morgan dropped 3.2% and Bank of America fell 2.6% as investors pulled out massive capital from these institutions. Big tech companies weren't exempted from the sell-off. Apple suffered a 2% loss in stocks. The massive sell-off seen in the stock market also crossed over to the highly volatile crypto market, as the same investors that own stocks also own cryptocurrencies such as Bitcoin. The crypto market also recorded a high sell-off, which resulted in the plummeting value of Bitcoin. The contributing factors seen by restrictions to crypto mining, the Binance ban, and the stock market crisis didn't directly affect the crypto market itself, as it remains a decentralized market, but the effect was on crypto traders and Bitcoin owners who feared these factors could tamper with their investments and went into what is termed panic selling. This sell-off saw billions worth of Bitcoins released out of the market, mostly by amateur crypto traders who buy and sell as the crypto market changes. But for seasoned traders, or hodlers as they are called, who hold coins for the long haul, this was just another day at the office. So if you have any Bitcoin on hand and are interested in entering the market, you might want to do some market research before making any big hasty decisions. There you have it, guys. Be sure to click that like button and check out some of our other videos. Until next time, I'll say goodbye and thanks for watching.